Hi there, welcome to the Dogecoin weekly Wyckoff session. And if you're new to these sessions, these are the areas that I will talk about, and they're based on two key concepts. Also, these are for educational research purpose only, and obviously I will discuss with the community here. And these are not financial advice, so please take note. Let's get started. Dogecoin. Similar to a couple of other altcoins, we've seen a sign of weakness point defined, and if we take a look at the last distribution cycle in 2021 mostly, basically, after the sign of weakness, there was a little bit of rebound, and we saw 2 rounds of last point of supply tests before the price eventually died down to the very long accumulation cycle until we had a small distribution cycle in 2024, and then we had roughly 140 days of accumulation before the current cycle. So all 3 distribution cycles looks very different, and there's no easy comparison across each other. The thing over here is, ideally, if we see over here the sign of weakness level once been defined and there's sufficient good news, the last point of supply would be able to go higher than the resistance line defined by the automatic response. So it didn't went too high up above it, but still it broke through that resistance, and then we eventually come down, and the second last point of supply was below that level. So if looking at it with a magnifying glass, so meaning at a micro level, we may say there are some bull traps over there. So basically it went above the resistance line, but didn't stay at that price for too long, and then it came down, and this can serve as a bear trap. People think the price would come further down, and then it went up, and then it comes down again. So a few traps for people if they are way too bullish or way too bearish. So coming back to where we are now, obviously the volume is pretty low compared to last week, and if we take a look at what happened in the previous round, initially after a few weeks of selling, the volume was low as well, but then it returned to a higher level than before, and then that's how we got to last point of supply bounce over there. So this time, again, if there are good news, obviously the demand will be higher, and we'll see a longer or higher green bar, taller green bar, and we'll see a higher last point of supply. Whether or not we'll see an upthrust that went through the green line, or even an upthrust distribution that go way higher to reach a level comparable to the 2021 peak, we'll have to see how the industry is developing. In terms of daily chart, basically it's similar to the last session when we talked about Cardano and probably a few other altcoins earlier. It's trading below the short-term playground zone. The short-term playground zone started November last year, mid-November last year, all the way till the start of this month, basically. That's roughly 82 days of trading, and right now we are, or the Dogecoin is trading between the pink line and the white line. The risky part is over here. You see there's not much frequent or overlapping trading activities at this level, and it's like almost 4 years, over 3 years back, that we can take reference over here. There are quite a number of trading activities, but that's not a good reference. So that's where the risk is. So the range that Dogecoin is being traded at as of the moment, it may be short-lived, and if there's no particularly good news, eventually it will return to the white zone. Let's see whether that would happen that way. If there are pretty good news, obviously it will try to return to the pink zone. So that's for Dogecoin. See you next